Hi friends, this is C. Ashwini Rastogi. Everyone today is making a foreign remittance outside India. They have a doubt whether Form 15CB is required or not, and Form 15CA is required to fill. Which part is need to be filed? In the Form 15CA, there is a 4 part A, B, C, D. So if you have a Form 15CB, then you need to file a Form 15CA Part C only, otherwise not. So this is condition in respect of making a foreign remittance outside India. So what is the TDS liability in case of foreign remittance? So section 195 says if you are making foreign remittance outside India, that is amount chargeable to tax, you must deduct TDS. So for the purpose of section 195, you must have a TAN number, and your TDS must be paid by the 7th of the following month, and at the end of the quarter you have to file form 27Q. So this is the whole story of TDS deduction in respect of foreign remittance. So now I come to why the form 15CB is required. So up to 5 lakh, if you are making remittance for a particular financial year, up to 5 lakh there is a no requirement. You can declare form 15CA and there is a no requirement. But banker is asked for each and every foreign remittance you should have a form 15CB. So what is the form 15CB? 15CB is a CA certificate. Chartered accountant is determined you are liable to tax or not. If your foreign remittance to non-resident or a foreign company is liable to tax, source based taxation is there. So in that respect, section 9 is play an important role. Since total income is a part of non-resident in India, since it is accrualized in India or deemed to be accrualized in India, is liable to tax part of your total income. So now we discuss section 9. So section 9 says, section 9 subsection 1 clause 1 says business income in India, capital income in India, or some royalty, fee for technical services, dividend. So in that scenario your income is liable to tax in India. So now I directly come out with the royalty payment. So suppose you are making some foreign remittance that is in the nature of royalty. So it may be case you are making remittance that is in the nature of royalty as per the Indian Income Tax Act, but as per the DTA it is not a royalty. So for the purpose of taking advantage of double taxation avoidance in India, section 90 subsection 4 says you must have TRC certificate. So I will come on the TRC certificate later. So first of all, you are making foreign remittance in respect of royalty, fee for technical services. Fee for technical services is management or consultancy or technical service in nature. You are making foreign remittance to non-resident or a foreign company outside India, you must deduct TDS as per section 195. The rate is rate in force as per section 237 clause A. So this is the story. You have to deduct TDS, and TDS determined by the CA in form 15CB. So there is a purpose code as per the RBI. So maybe it may be case you are making foreign remittance in respect of maintaining outside India some branch office or some making a foreign remittance for the purpose of salary to outside India. So that is although not part of the TDS, but you have to get form 15CB. So maybe a case you will fall under the exception in section 9(1) clause 6 or 7. So let us understand what is the fee for technical services says. When source based rule is applied, so source based taxation under section 9(1) clause 6 or 7 says that if you are making payment by the resident, since you are a Indian company, it's a resident in India, to a non-resident or a foreign company, your income would be taxed in India, but if it is in the nature of royalty or fee for technical services, so your income would be taxed in India, royalty or fee for technical services, but it would be except in case if you are for the purpose of earning or income outside India. Suppose you are a Tata or Reliance, you are making foreign remittance for a business outside India or some income earning outside India. In that case, you would fall under the exception. Source-based taxation is not allowed. Your non-resident or foreign company would liable to tax in their resident country. Source country would not tax. So this is a story in section 917 or so. There is an important amendment by this Finance Act 2023. Your rate changes 10% to 20%. Suppose you are making foreign remittance for fee for technical services, that is tax, source based tax as per the section 917, you have to deduct 20%. Previously it was 10%, now it's 20%. This is an important amendment in section 115A. So royalty is also 20%, dividend it was previously 20% and now it's also 20%. So there is an important amendment for 20%. So in respect of dividend, previously it was 115O section is there. Shareholder nothing is liable to tax. They have a exempt under section 1038. But company while making a declaring a dividend, they have to pay DDT. So the concept of DDT is away. Now the dividend is taxed in the hand of shareholder at their slab rate. In case of resident, the tax rate would be 0 to 30%, and in case of non-resident, it maximum rate is 23.92%. Basically, this is in case of dividend. So now I come to fee for technical services or royalty. So in case you are making foreign remittance for fee for technical services, the TDS rate as per the income tax rate is 20%. So you have to gross up, because the non-resident or a foreign company would not bear the tax liability, then you need to gross up. So for the purpose of taking advantage of double taxation avoidance agreement, may be case in case of UAE, the fee for technical services clause is not there, and you have don't have a business connection in India, not a P in India, so your income is not taxable as per the DTA. So you would not liable to tax on source based taxation, since the clause for fee for technical services is absent in the UAE treaty. So in that scenario, your non-resident foreign company liable to tax in the other income. Article 21 will important play, but it will be taxed only in case of you have a PE in India. So this is the situation for permanent establishment and some more advantages there in the DTA. So there is an important concept is make available clause in the double taxation agreement and MFN clause. So one by one I come this important concept of double taxation avoidance agreement. So important thing is, as per the Income Tax Act is 20%. So you must go for DTA advantage. So suppose DTA says it would be not tax if it is make available clause. As per the US treaty, there is a concept of make available. So हम समझते हैं हमारे कान से ऊपर की जो भी बड़ी बड़ी कंपनी डेवलप कंट्रीज हैं, उन सब ने मेक अवेलेबल का क्लॉज डाला हुआ है कि हम अपनी जो सर्विसेज आपकी कंट्री में दे रहे हैं और वो सर्विसेज ऐसी हैं वो आप आगे कभी यूज़ कर लो, तो उसको हम मेक अवेलेबल मानेंगे और जो है तभी टैक्स होंगी, अदरवाइज नहीं होंगी। मेरे यहाँ यूएस का एम्प्लॉय आपके यहाँ गया और ये कैमरा बनाने की पूरी मेथड आपको समझा के आ गया और ये कैसे बनेगा ये भी समझा के आ गया, तभी टैक्स होगा, अदरवाइज टैक्स नहीं होगा। अगर मेरा, ये तो मेकअबल की बात हो गई, अगर मेरा बंदा आपके यहाँ गया मैकेनिक में, आपकी पूरी प्लांट एंड मशीनरी का इंस्पेक्शन करा और उन्हें अपनी रिपोर्ट दे के आ गया, दिस इज़ अ कंसल्टेंसी इन नेचर, सो यहाँ तो मेक अवेलेबल है ही नहीं, तो यहाँ टैक्सेबल की लायबिलिटी नहीं आती। तो ऐसी कुछ कंट्रीज़ हैं जहाँ मेक अवेलेबल का क्लाउज है, जहाँ मेक अवेलेबल का क्लाउज है तभी टैक्स होता है, अदरवाइज नहीं टैक्सेबल होता। अब आते हैं मोस्ट फेवर्ड नेशन। So what is the most favored nation concept is there in the, suppose you are making foreign remittance to Switzerland, okay, and Switzerland, there is a protocol in the Switzerland TTS is, if after the signing of this TT any most favored nation members, OECD members, get a lower rate or narrow in scope, the advantage would automatically given to the Switzerland. So since after that there is a Colombia, the tax rate as per the Switzerland TT is 10%, but the Colombia TT is 5%. So they reduce the tax rate. So both are the member of OECD. So this 5% clause will automatically applicable in case of Switzerland foreign remittance. So there is an important amendment by the circular of CBDT is that if you are taking advantage of MFM clause, you must satisfy all the condition. ये जुलाई 2022 की बात है जब CBDT ने ये कहा, आपका पुणे हाई कोर्ट, पुणे का जो जजमेंट आया था कि अगर आपकी वो कंट्री बाद में OECD का मेंबर बनी है तब हम नहीं देंगे, उसको साइनिंग DTA की साइनिंग के टाइम पे मेंबर होना चाहिए। और वो जो आपने जो कोलंबिया का 5% रेट लिया है वो नोटिफाइड होना चाहिए, आपने अगर नोटिफिकेशन में नहीं आया तो वो हम नहीं देंगे। तो ये इस तरीके से कंडीशन है, तो वो हमें मोस्ट फेवर्ड नेशन का क्लाउज लगाते समय हमें देखनी है कि सर्कुलर की कंबाइंड कंडीशन एप्लीकेबल करती हैं कि नहीं करती हैं। सो इम्पॉर्टेंट थिंग, यू मस्ट हैव अ TRC सर्टिफिकेट। इफ़ यू डोंट हैव TRC सर्टिफिकेट, वी विल डोंट गिव DTA एडवांटेज अंडर सेक्शन 94, दैट इज सेज Indian income tax says the tax rate is applicable which is more beneficial to the assessee. If it is as per the DTA more beneficial, then you can enjoy. Income tax rate is not applicable. For the purpose of DTA most beneficial rate, you must have a TRC certificate, and TRC certificate should be in the format of Form 10F. That is also need to be filed online. Now the PAN number is requirement gone away. That is extended till 30th September 23. So your TRC certificate should be in the format. That is not a case. You don't require Form 10F. As per my understanding, you don't require 10F. Most of the TRC have some all the content, name, period, and important thing is period. When you are signing Form 15 CB, you must have a TRC certificate. Suppose in TRC certificate there is a period is mismatch. In that case, you ask with the from the assessee, arrange updated TRC certificate. So this is the case for TRC certificate for the purpose of taking advantage of double taxation avoidance agreement. You must have a TRC certificate. So ये तो पक्का है भाई, 20% का आपको सोर्स वेट टैक्सेशन लगने वाला है. To avoid, you can take more beneficial rate as per the double taxation avoidance agreement. On that basis, you need a TRC certificate. TRC certificate should be availed before deduction of TDS, that is before getting a Form 15 CV. So most favored nation clause is very important. Some country have a 20% withholding tax rate in respect of dividend. It's a tax 20% as per the Indian Income Tax Act, but DTS is 10%, and in case of you have a beneficial owner, more than 25% stake in a particular company, you are getting dividend from that company, and holding period for that your share is more than 365 days, continuous in nature, then you can take advantage of 5% MFN clause. On in respect of make available, you might be excluded from the purview of fee for technical services, and maybe in case of royalty there is a very vast definition under the Indian income tax definition of royalty. But if you may go for DTA, there is a narrow definition. Some word is not there in DTA. You can took advantage of DTA for that. Maybe you will exclude it from the purview of double taxation avoidance, purview of TDS by virtue of DTA, and you have to put TRC certificate for the purpose of taking a 0% rate or lower rate. So there is an exception in section 9(1) royalty fee for technical services. If you are making a foreign remittance that is for business purpose outside India, you would not fall under the source based taxation. So this is the whole story for Form 15 CV. While issuing a Form 15 CV, I give you advice. Important thing, you must put correct RBI purpose code, because you are submitting this form to assessee. On that basis, assessee is filed Form 15 CA by filling up acknowledgement number of that 15 CV. Suppose you put a wrong purpose code, the story is default. So there is an important thing is in respect of penalty in respect of chartered accountant. If declaring a wrong declaration in Form 15 CB, income tax department might levy a penalty in respect of CAs also. Avoidance of 15 CB, 15 CA is totally don't do that, because if you make a foreign remittance and bank would not ask Form 15 CB, 15 CA, you make a remittance without 15 CA, then you will levy 1 lakh penalty. So another thing is disallowances of expenditure is also there. Maybe case you are making commission expenditure to outside India to your buyer, so that income is taxable under the head of business income, but business income is liable to tax in India only in respect of have a permanent establishment in India. So I would advise to get a no PE declaration from your non-resident. So another thing, while issuing 15 CV, we must take a all declaration from the non-resident. So tomorrow suppose आपने तो आज पेमेंट करी नॉन रेजिडेंट को, और उसने भी कहा भाई मैं नहीं जानता टैक्स लाइबिलिटी को, आपने भी अपने पास से बियर करके ग्रॉस अप कर दिया, और कल को वो आ जाए कि भैया जो है इस पे गार का प्रोविज़न लग गया, या जो है उसका जो है इंडिया में पी था तो आपने जो है टैक्स रेट क्यों नहीं काटा. तो इसलिए हम प्रॉपर तरीके से एक डिक्लेरेशन साइन कराते हैं, वो भी इंपॉर्टेंट है फॉर्म 15 CP इशू करते समय. फुल ईयर में जो भी आपने फॉरेन रेमिटेंस करी हैं, आप पूरा एक चेकलिस्ट बनाइए कि 15 CA इसका क्या है, 15 CB नंबर क्या है, और इम्पॉर्टेंट थिंग 15 CA यूडिन से लिंक होना चाहिए. आपको एक टाइम लिमिट के अंदर यूडिन नंबर जनरेट करना है और उसको लिंक करना है 15 CB से. तो ये बहुत इम्पॉर्टेंट है. और TDS डिपॉजिट होना है, TDS फॉर्म 15 उसका नॉन रेजिडेंट का TDS का रिटर्न फाइल होना है. तो ये सब स्टोरी है. ओके, तो एनीथिंग for expect taxation, I would be there. So important thing, if you are having some foreign employee working in your company, so you are making a foreign remittance to their expect. So salary income section 195 को exclude करती है. So आप एक नॉन रेजिडेंट को सैलरी पे कर रहे हैं तो आपको नॉर्मल स्लैब रेट में सैलरी पे TDS काटना है और वो 195 में नहीं आएगी। सो मैंने काफ़ी चीज़ें कवर कर दी। होप सो यू वुड लाइक दिस वीडियो। बहुत कट शॉर्ट था, इंटरनेशनल टैक्सेशन का कंसेप्ट बहुत ही डिटेल्ड में है। मैंने आपको डोमेस्टिक टैक्सेशन अलॉन्ग विथ इंटरनेशनल DTA बहुत कट शॉर्ट में बता दिया, बट इतना है नहीं। बिलीव मी, दिस इज़ treaty and interplay TT with the local domestic taxation is very vast concept. So thank you.